All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for February 7th, 2023. Had a good 90-minute podcast with Jeff Boccaccio at Society for Technical Analysis. Originally scheduled for an hour, but it took 90 minutes to fit everything in. Had a good times and laid out good information. I'll get the replay of that tomorrow and make it available to you. It was a nice executive summary, sort of a origin story about what we do. So we'll start with the portfolios. I've added SPY to our little lineup here, and I'm looking at the monthly, and then we'll look at the 9-day, the weekly, the 3-day very quickly, just so you can see the value of these. So on the monthly, this sell-off has sort of bottomed out, and we've gotten through the dragon, and the monthly is challenging the PSAR and looking like it could break out here above 415. So that looks pretty healthy. A slow turning point. The 9-day is doing a great job of holding above the PSAR, and so what we're not looking at the prices so much as we are the RL10, which, as you can see, is starting to pull away from the PSAR. That's good. It's above this peak of the RL10. Next stop is at about 440 for this little bump, and then the all-time peak up here around 470. So we're well on the way to recovery based on the 9-day. That is showing health. Same with the weekly. The COTA 2 is a little more prominent here. And you can see that we've gone winter, spring, and now in the summer, and looking really good. That the COTA 2 is even more pronounced. It's above this peak of the dragon. Next stop, 430, and then next stop after that, 450. So we've got a nice price ladder to climb, but all things are looking good. All right, let's take a look at the swing portfolio. Let's get to our 30-minute. It's the advantage of TC2000 is you get that fractal look, and so here we are on the 30-minute. So the yellow boxes today, you'll see that, and this blue box here is the 5-day. So we had set up yesterday, you will recall, this little breakout box, and I was ready to go long or short. And so today I tried long and it didn't work, so I cut it fast. And on this bar, and then when this fell out of the blue box, I tried short and then cut it here, and then I just took a break. And when we got the RL10 cross through the PSAR, caused the PSAR flip, I then entered here with this standard risk box, which is the same as that one. So all things being equal, we are long Alcoa on one after a couple false starts. Cliff, we're short. This was the one where we had the bright blue box were the breakout boxes I drew yesterday, and then right from the opening this thing collapsed and it rode nicely. I thought really hard about taking this exit, but I think there may be one more play lower, and if it breaks below today's low, then I'm very close to adding a second position. But I'm not going to I'll probably take the second dot as my stop so that I can lock in this gain, but I was willing to hold that overnight. CVS was also a breakout box from yesterday. We got a gap down and started to sell off, so I got short. And as it started to recover, I just scratched it and just stayed out of this hot mess all day. This one, I'm waiting to see it break below the 10-day low before I get interested again. This was formerly a Godzilla. I think we may have seen the Godzilla move already. Devon Energy, the breakout box worked. And we got the RL10 took off, standard risk, closing well, actually closing well here. And it's testing this. I would be ready to add another position if it breaks above 62.30. That one's pretty nice. That's like almost 2R in hand and looking strong. Emerging markets was a that's where we took the position at the close with this standard risk box. It got tested today, but I've got my stop in, and I'm going to give it about 3 days with that stop in place, and we're going to see if it can make a move up into this region and manage to stop from there. So still long one and slightly in the money. Mexico was a breakout box that we tried long, and then it immediately sold off today. I took the -1 hit and just stayed out of it, so down one on that one. Brazil was a breakout yesterday in the afternoon, and then today open started to sell off, so just scratched it. No swing on that one. International paper, we got short on that one today. The PSAR continued to push to the downside. I like this one short. It made a little run up, but then closed weakly, so we're about at break even. But if this falls below 40, I think this has a real chance to go and to connect all the way back to 38, which is a 5% sell off. This has a feeling of a COTA 2 to the downside shaping up. So after that strong earnings report, it's had 5 days to make a move, and it really hasn't. And this is all feeling down. So I like that short. This is real estate, IYR, excuse me. There we go. So real estate, we were short from here, and today got the gap down, sold off, and started to recover. So I just cashed it today. I wanted to make some bank to cover that loss in EWW. So we got about a 0.5 win on that one. And now it's just kind of finding support. If this thing continues to hold support around 91, this could actually be a place where we see a nice move back to 96. So if it was going to collapse, it had 3 days in here and it didn't. So we'll take the little half hour and just get out of that position. McDonald's, we took this one at the close. No, I'm sorry, at the open yesterday. And we enjoyed that move. Today, it's been monkeying around. It closed well, though. So we're about 0.7 in hand and getting ready to break out above 268. I actually think with today's strength that this has a nice chance to move because it's cleared that resistance. The next target is back here at about 272. I like this one's chances. I would look to add above 272 because that's free and clear. Marijuana, we're short from today. This has that feeling of COTA 2 and failing, and today was a collapsing dragon entry here. It gave me the first sell-off to the low of the day, closed to about break even, so we're going to give this another couple days this week, and hopefully we'll see that break below today's low and the 5-day low, and then down it'll go. So short marijuana. Clean energy is just stalking. I should have gotten long, I think, this one. This one feels like a COTA 2 in motion. The PSAR is flipped and it closed well. I think I missed the entry here, which was finding support at all those levels. So the next move up, the default position is at 49 is in play. There may be some time to grab this tomorrow. If it's strong from the opening, I may try to play catch up on that one. But I feel like yesterday I missed that move, or I missed that move today in the afternoon working on other things. I meant to say today, missed it today. Treasuries, we were long on a hedge at the close yesterday. It was looking for some kind of retracement, but the market was strong today and it just rolled over. So we took the uh, half hour loss there. Um, on a better day, I might have gotten short here. Not mentally prepared to do that though. Tesla, we're just stalking. I like the way that it has held this support level here above 190. That feels strong. And this was a good close today. So my spider sense is that above like about 198, this thing is a swing long above that one. I'll be ready to trade that tomorrow. U.S. Steel got smashed today. This this was the it's a trade of the day today, but this was also a swing. So this is where the swing initiated along with the original turbo intraday trade. Now we got 4 positions into this thing on the day trade, and I just as that was such a nice 1 day move, I just took that one as a swing intraday 1 day swing because I had some other losses that I needed to make up. So that's this one paid for a lot of those. So that's 1, 2, 3, 4, 5, 6 are on the intraday swing, which paid for all the previous partials. And so I feel pretty good about that. We raised some cash today in the swing portfolio. So that's the swing portfolio update for today. All systems go. Next up is Sniper Trade of the Day. So this is the intraday trade. Sort of already gave it away with last comment. So this is U.S. Steel. Symbol is X. This is on 3 minutes. This was the opening and started to collapse right away. Standard risk. Looking to the downside. Check or hold. And this, so we initiated both a swing trade and an intraday turbo trade on this one. So all this thing did was just fail, and I was way late getting that second position in because that's 1 unit of risk. That's 1, 2, 3, 4. I didn't get the second position until it was already 4 in hand, so I missed. I was slow on that one. Then it's just another collapsing dragon, so a third position because why not? And then a fourth position once again because why not? It rebounded, and because I had 4 in, I took the win, tried the long, and then that gave me a half an hour loss. So just counting up the first one from the exit here. This the fourth position was a scratch. The third position was about 1.5 on the Richter scale here. The second position was about 4.5. You know, 1, 2, 3, 4.5, and then the last one was about 8. So that's 14 on a intraday position for U.S. Steel, plus the 6 on the swing that you saw earlier, U.S. Steel. I mean, it's a steel company, for crying out loud. The continuation short, because why not? And then cash it at the regular spot. That's another 2. 1 unit of risk, 2 units of reward. And I think that's all we did on that one today because that was a pretty good day at work in U.S. Steel. The PSAR is your friend. The 2R battle drill is your friend. They all look the same leaving the station. Do routine things routinely. Let's take a look at the traders today. There was some really good work from the team. Agnieszka, this is the British pound Canadian dollar. Gets the collapsing dragon, PSAR flip, standard entry, standard risk for her, +1. Tries a continuation. That might have been a little bit slow. We might have wanted to get it here instead of here, but that's a great exit for -0.4 and nets 0.6. Then in the Euro Swiss, she notices correctly that the PSAR flip was a better entry, but she got this one. The better exit would have been a scratch, but she ends up with a -0.2. So if she had been best of the best instead of -0.2, this might have been a +0.2. So mistakes about a half an R. This double top and then the collapsing dragon here would have gotten paid on this one, and then instead of a scratch, she would probably pick up 1R. There's a continuation pattern in here somewhere, and just a slow grind, but she does get it in time to make 1.6 to net 1.4 for the day. If you take off, say, a 0.4 for a little bit of imprecision, this might have been 1.8, but we'll take 1.4. That's a good day at work. Tim getting some nice work done here. Tries the breakout from the VWAP, cuts it quick. Where's this next one? I think this was a little slow to get in, to be honest, right here. We're well below. We might have gotten this one here instead of here, but he still gets paid nicely. And then this Kata 2, after it crosses the dragon and the PSAR flip, gets paid. So 0.4. Good precision trading, stays out of the chop pretty well. And then on Apple, there's this big gap down and a rocket up. I think on that one, when it breaks yesterday's PSAR, we might have had a chance to get a slightly earlier entry, but that's still pretty good and gets paid. What I like here is that he's not waiting for confirmation of a losing trade. He's getting paid 0.3. This is pretty good. It's a micro loss. Good stop and reverse on the PSAR flip, gets paid. I like all of that for 0.2 and gets 0.6 on the day. Very professional work today. And notice those were not moving all that much. Here's Nolan on Devon Energy on the threes. OR3 gets short for +1. PSAR reversal, quick loss. This one stuck around way too long, especially on the second time. When you have a long and it doesn't work and it reverses right away, don't stay longer on it. Yeah, fear of missing out. I don't mind that as a re-entry, to be honest. I mean, remember, this entry here is above the hump of the RL10. That's a good entry, but we've got to, when that fails right away, take it in here and cut that in half. And then here's your, now that you've had two failed longs, so you had a successful short, two failed longs, and now you get a PSAR flip, you need to crush that one. And then take the exit at the edge of the drag. Remember, because you had 5 bars in here where it did not fail further, and so you can take it at the edge of the dragon, and then that's a great entry. I love getting paid, and we should be re-entering right away. And then instead of a scratch, you'd make about another +1. Great re-entry on the Kata 2. Excellent exit at the edge of the dragon. You're catching on. PSAR entry, that's correct. We should be short here and cashing it at the edge of the dragon, then long here instead of here. and then instead of 0.9, that would have been maybe 1.5. There's your dragon rolling over. This is an owl entry and a PSAR flip, and that's, these two are the trades of the day. Now, you did get paid, but we want to study that, and this caught a 2. This is a caught a 2 because of these lower or higher lows. But really, after a big shot like that, I would agree. It's also an SSC. So pretty good work today, 3.1. But my spider sense is that this could have been 6. Woj on Devon and Tesla pair. He got the same short. Short again. Great stop and reverse. Somewhere in here there might have been a second entry, but that's 3.5. And then couple quick scratches in Tesla, not much to write home about. And he was working that really nice trade in Devon, and so it was a span of control. So net about 3.4 on those. And then his U.S. Steel and NVIDIA. U.S. Steel, that's the same one that we were working. You see he's got measured pieces of that all the way down. Everything's under the PSAR, so every failure is reinforcing. So 2.5 here, and net 6 for the day. Good day at work on his 4 standard vehicles. And then finally, this is Gary on Devon also. Here's the OR3, so he's short, and cash is here for +1. Quick loss, great PSAR flip. On this, I like getting paid to pay for those 2 losses there, but then when that does not fail, we should be able to get on board here or here and get that trade. If you're going to take this short, I don't mind you waiting to let it get past the edge of the river, but really, we can, on Devon, on the PSAR flip, we could be short here and get paid, and then when it doesn't fail, that reversal gets you in. And again, the PSAR flip in Devon is always a good thing. I mean, gee whiz, look at those moves. That's why Devon Energy is on the list. That thing trends intraday like a maniac. All right, let's look at the daily report. This is dashboard number 1. We're still in bullish quiet. That's good. Really strong. Overbought on all dimensions, and we're above 50 on the RL270. 5.5% above the 200-day moving average. The ADX is beginning to get strong at 22. It's almost becoming a strong trending bull. Risk C is still telling us risk on. It's not outrageously volatile for the upside yet, so we're in good shape. Emerging markets is in a position as a rebound for the overreaction and channeling, and so I still like that position. Large cap summary, plenty of auto framers to choose from. There's a 5DD here on Nike. That's of interest. 551W in Cisco and in McDonald's. They don't have really favorable auto framers, so not the highest priority for me on that one, on those patterns. In the ETFs, lots of auto framers to choose from. Plenty of 551Ws. And so I like the ones where you have the signal and it tests out well on the auto framer. So emerging markets is key. Gold is interesting. ILF is interesting. And energy looks interesting as well. So Devon Energy should still be in play tomorrow, is how I'm reading that. Lots of auto framers with standard framing data for those of you that are setting up the mechanical trades. There's all your framing data. Walmart's very interesting right now at 6.8 to 1. Coca-Cola 3.7 to 1. Brazil 2.8 to 1. So lots of goodies to choose from for you mechanical traders. Shifting to the snipers. So I talked about this with the Society for Technical Analysis. So the trade location should be very straightforward. There's 3 regions in a look back period that make it a higher probability for a breakout move. And that is if it is dramatically overbought, in the upper 10%, or if it's dramatically oversold in the breakdown zone in the bottom 10%, because then if that's like a collapsing dragon. If it fails, it's a big collapse. But if it breaks out to the upside, that's a big gain. The other one that's harder to see is this little fence sitter. When he's sitting right in the middle of the look back period, what that means is if you can put a tight bracket on it, like a minimum manageable risk box or an ATR or something like that, you can get 1, 2, 3 to 1 usually before it even gets to test the top or the bottom of the breakout range. And that's why the fence sitter is very interesting. So you have 3 extreme locations. Region A, which is a breakout ready to break out or revert, a breakdown in region C, which is revert or breakdown, or you have this middle zone, which is ready to break out to either extreme inside that trading range. It still stays in the range, but there's enough room for it just to naturally move out. So those are the three interesting zones. Now we also look at 3 time frames for like day traders. Now let's call these swing traders, position traders, and long-term buy and hold. So what our idea is on the compound critical state is that if that price location is in an extreme condition in all 3 of those regions, then you have something where 3 different piles of money and traders are each ready to make an emotional large-scale move, and that increases the probability of a larger than normal move. Because they're only just looking at their own screens, they don't know that these other guys are also ready to make a move. And so when it happens, it's big, and it's a surprising move, and that's where that momentum comes from. Now on the volatility, we're looking at 1-day and 5-day volatilities. And what we're looking for is abnormally quiet or abnormally volatile. We're not so much interested in normal volatility. And here's where it gets interesting. So you could imagine how on the 5-day and the 1-day, you'd like to see both of those in abnormal states. You'd love to see them both abnormal. So what are the combinations? You could have 5-day volatile and 1-day volatile. That's good. That thing is in play. It's running amok on both the 5-day and 1-day look back. So that's something that's in play. You could have something that was 5-day volatile and 1-day quiet. That's something that may have run up really hard for 4 days and then today ended in a doji. And that means you better be ready to cash the win or be ready for the reversion or ready for the second leg as it continues out of the doji. So that puts you on alert. The fact that the volatility went from 5-day volatile and then 1-day quiet. Both of those are abnormal, but it has a slightly different feel than 5-day and 1-day volatility. By the same token, 5-day quiet and 1-day quiet means this thing is on double secret probation and is so quiet that the very first movement out of there is going to start triggering abnormal responses because it's surprising. So that's like a perfect straddle a quiet pond on a quiet night, and the first move spooks the herd. That's the one that starts the stampede. And then the last one is a 5-day quiet and a 1-day volatile. And that's something where you might have had like 4 days of very low range and then 1 day of a breakout. And that's the beginning of what could be a big move. So each one of those 4 states, the 5-day and the 1-day, are in abnormal volatile. It's either quiet or volatile. And those 4 combinations each have a different feel. And that's what I'm looking for when I'm isolating on this chart. So these are the Godzillas, and this is nice because you have extreme locations on the 150 and the 30, and you have abnormal volatility. So ATVI, for instance, is one that is volatile. That thing is enraged and is in play. Whereas CVS is an extreme sell-off, but is quiet. So it's had a 150-day and a 30-day sell-off, but the 5-day and the 1-day are both kind of quiet. So this thing has not yet broken out. We saw that on the swing portfolio. But when it does, the breakout from that little quietude could be massive. It's either another leg down or it's the beginning of that retracement after this abnormal sell-off. So that's a quick down and dirty of what I'm looking for on these stats. So what you can see here is I'm very interested in those things that are double green volatility. Now look how strong these two are, IT and CINF. The 30-week and the 30-day and the 10-day are all well above 0.9. So that's in the upper 10% of each one. And the 5-day and the 1-day are extremely volatile. And the 1-day move is a 7 sigma. So you don't even have to look at the chart to know that that thing is making a big move. So if we go now to the, we'll pull up TC2000, the S&P 500, take a quick rundown to IT. See if we can frame a trade in there. So this is Gartner Group. So I'm going to go back and look at the daily charts and the 150. So what you can notice from here, let me get this out of the way. Here's our 150-day look-back period, and you can see that look how big that 1-day move was today. That thing was fully 1/3 of the volatility that we've seen in the last 150 days. A third of that was today. That's a 7 sigma move. So that's extraordinary. That thing is absolutely in play. If we zoom in on that, what you can see is that there was a big gap down that chased a lot of people out of this that had bought it at 355. That was the tail end of a 3-day selling, and that ran all the way down to 320 and then went all the way back up to 350. That's 2 10% moves intraday and closed really, really well. So one of the ways to interpret that is that everybody that could be tempted to sell this thing because it broke below those support levels, that was people panic selling in here, and then the buyers came in and ran it all the way back to the top, and it closed very well. And it's only a short distance to a new 30-day high and a 150-day high. So if that thing breaks out of the 150-day box, look out above. So that's like a fireworks continuation. So you could put a tight risk box around that and either play the continuation up or the collapsing price back to here. That one's going to be in play tomorrow, and we'll take a look at that in tomorrow night's play. But that's what a 7 sigma move looks like. We know that that is in play and that there's more to follow tomorrow. After a day like that, it's not back to normal like the previous 30 days. That thing is going to have some wild gyrations tomorrow. So that's the kind of thing that we're looking for on these abnormal locations and the abnormal volatilities. And as you know, I like things that are double green because they're in play, but something like TDG and the Fangs that have had a very quiet 5 day, but now a large 1 day move, that could be the beginning of a very interesting move. Whereas all of these over here, uh, volatile 5 days and abnormally quiet 1 day. So that could have been harsh sell off that ends in a tiny little doji today. And so we could see a rebound or a breakdown out of that very tight risk box. So things that are volatile on 5 days but quiet on 1 day allows you to get a mechanical trade frame that's probably very favorable. So that's just a quick impromptu lesson there for the snipers. Standard MACD 4 seasons still being dominated by summer and fall. All of these that are in the summer are the ones that are dominating the gains right now. Microsoft is doing well. Apple has returned to doing well. Goldman and JP Morgan doing well. And here's the U.S. Look at this. IWM, MDY, Spiders, Tech. All of that is starting to recover nicely, and the U.S. is kind of back in the lead right now, whereas the internationals are starting to lag a little bit and starting to roll over. So this could be a shift to the U.S. and to tech. To that end, there's your strength today. Microsoft and JP Morgan. Also Boeing. ExxonMobil, strength and energy. Merck and Chevron. So energy and tech is coming on strong. There's your energy, XLE. And here's your finance. That's JP Morgan and Goldman bringing it home. So everything's looking pretty good. And money is rotating out of the treasuries. I should have put the short swing back on that thing. So treasuries getting weak. And now the globals like EWW and EWZ starting to be weak. So that's we need to keep that in mind. All right, that's everything I got for today. And we'll get this published and posted and be ready for these guys tomorrow. Take good care. And I'll share with you the podcast overview. I thought Jeff and I had a lot of fun with that one, and I think there were some good summaries of our basic ideas. So take good care, and we shall see you tomorrow.